Hi traders, and welcome to the technical analysis market wrap on Friday the 11th of March. So I've seen some continued good movement on the indices and some of the majors this week, so we'll jump straight into the charts and check out what has been the big movers and see if there's any opportunity that we can take advantage of today and early into next week. So we'll jump straight into the Aussie USD here first. We can see that we had a really big move at the start of the week, touched the zone that we actually highlighted last week. So that's a really good move up to the 74.20. It was very explosive. Once it broke through the 200 moving average and that role reversal zone, that was a very key break. You can see that the support here that we had throughout this period early in 2021, around that July area, was again the catalyst for the break. So the 200 was right over that. Once it did break and close above there, we were off and running. Difficult one to get into on this particular candle because it did move so quickly, but on the smaller time frames it made a lot more sense. So on the 4 hour, it certainly had a series of higher highs and higher lows, but you certainly could have traded this candle here for the scalp, and they are really scalps at the moment. We're still going to be definitely in scalp mode, not looking for anything longer than probably that 30 to 50 pip moves, because I think they're the ones that are going to get us in and out in a safe manner while the market is still fairly volatile. The take profit was very obvious there. Now it broke down, came down and basically touched the 20 moving average. Again, this is an area that is a level of support. So you can see right through here, we had support through here, and we had some resistance through this area here as well. So, you know, again, I always say it, but it just makes sense in that volatile markets, the markets are going to gravitate to levels of previous support and resistance like a magnet because they're a little bit uncertain. So really good trading there, very obvious pullback. And now that we've seen another break above this level, yeah, it's starting to track up again fairly heavily. So the problem with it now, of course, is it's in the middle of nowhere in the sense that it has broken through that resistance again, and although its target is fairly clear, it's a little bit difficult to get into because it's starting to move fairly quickly. Now the only way you can probably look at it and say the 4 hour again was a really good entry here that's given us all the information that we need. We've got the lightning bolt. Once we've got that confirmed lightning bolt on this candle here, we were basically off. So really, if you want to scalp this one, you've got to go down to a small 1 hour time frame. If we get a pullback maybe down to the 20 moving average, that's probably the signal that we could potentially go long on this one with a very clear target zone. So really good trading. The Aussie's been really good to us of late. So, but you just got to wait for the pullback now. See if we get a pullback down to the 20 moving average on the 1 hour, and then potentially look for longs when we break above this level. On the short side, it needs to get back below the 73.20. If it closes below there on the 1 hour even and breaks down below these moving averages, I'd be starting to look for trades down to the previous lows, which is around this level here at around the 72.80. So all scalps again, 30 to 50 pips, but certainly good trading on the Aussie. All right, we'll move over to the US dollar CAD now. This one finds itself at a pretty good level of support as well. Actually, you can see we've broken through this level. I'll put a horizontal line there. You can see how important it was right through here. This is the daily chart, of course, so we know it's fairly significant. Came back down, touched a 20 moving average, and also coinciding with this resistance level. What we're looking for here, of course, is again a series of higher highs and higher lows to get back up to the previous highs. No surprises that it got up to the 129 and stopped, because that's what it's done many times before. Very strong level of resistance. So we'll be looking for the same pattern to play out again. Again, just a very small scalp. This one's a little bit bigger though. You got about 130 pips range on the way up, but you got to go to the smaller time frames and look for that change of trend. You can see it really highlights how strong this level is on the 4 hour. You can see that resistance is right through there and right through here as well. So if we get a change of trend in this area, so probably looking for that 1 hour, if we get a series of higher highs and higher lows and a break above the moving averages, then we're looking for the long up to around that 129, 128.80 again. Pretty good trading there. But if we get a break below this level here, below the 127.80 on a daily chart, so if we get a close below the 20 moving average, so I'm expecting the 20 moving average will hold up if it's going to be strong enough at this level. But if it breaks down past the 20 moving average, then we start aiming for the bottom of that channel again, which is around the 126.80. So I think good trading either way. I'd be happy enough to go long or short on this one, but we're waiting for a change of trend on the 1 hour to get off this level here to push to the previous highs. And if we get a daily close below the 20 moving average, then we start aiming for the 126.80. So again, pretty good trading on the CAD. All right, US dollar yen. This one's been slow and it's been trying to get up, and it's finally we've seen 3 days of positive movement already, which is good. testing the highs now, like it's testing that 116.20 area. We know how strong a resistance level this is, obviously, but it is starting to creep higher, no question about that. It broke out of that congestion zone right through here, and it is trading well above the moving averages. It's in the middle of nowhere now, in the sense that very difficult to enter along, of course, because it's right at that resistance point. But if we do get a break above this level, and I would probably be erring on the side of waiting for a retest on this one, because realistically, it's going to be a hard one to trade, because if it does break through, you might find it'll break through quite aggressively, and the daily candle will be well and truly higher than it before it actually closes. So what you want to be probably waiting for, unless we get a close just above it and it looks pretty strong, then we could look for a smaller time frame entry to go along from it. But I'd be just as happy to wait for the pullback to this level from above. So let it break up above, come back and test a 116.20 from above, and then get that little lightning bolt and then trade that one. I think that's probably the preferred trade here, because that's the more secure trade. Failing that, of course, if we go to the smaller time frames and we see a series of lower highs and lower lows at this level, so you can see here, this is the level that we're talking about, of course. If we see a series of lower highs and lower lows on a 4 hour or a 1 hour, then that gives us a signal to potentially short it again to the previous lows, which is around this level here, at around that 114.80 area. Again, 50 to probably 60 pips on these ones at most, but they are going to be good trades, because it's been there before and it's done it plenty of times. So really, really good trading. I think that, this is a beautiful thing about the yen. Once it does actually start trucking, you can see how clear it is, all the way to the 20 moving average, all the way up on the 1 hour, plenty of opportunities to actually get in. This could form a double top up here, of course, if it breaks down below this level here. That's going to be a double top at a point of resistance. So, pretty good pattern overlay. But again, it needs to close, the hour needs to close below these levels here. In my mind, even the 4 hour does. So the 4 hour really has to close below the 115.80 for me to be convinced that this is probably going short. This could be a definite bounce up from this level here. So just be careful. If it does get here, it needs to close below it. And that, probably somewhere around the 115, probably 50 area would convince me that it's going to go lower. There's plenty of room to go down. It's another 70 or 80 pips from there, but that will give us a confirmation that we need that it's certainly breaking down and that resistance is holding. But this could be a very, very tricky area for it. Don't be surprised if it gets down to this area here and bounces off it, because it is very strong support at this point here. Okay, so because there's going to be a role reversal, that resistance is very strong. Support at the 115.80 could also be equally as strong, so just be mindful of that level. All right, we'll move all to the dollar index now. This one, no surprise to see that it did break down from a very, very strong level here. This week we saw a big weakness candle. It's having a little bit of a resurgence in today's trading throughout New York, but again, this was a big sell-off, but no surprises. I mean, and this is why we look at the bigger time frames first and bring it right down. If we go down, we've got to go out a long way to see why this is so important. But we'll go out to a monthly, which is as long as you're going to get in the time frames that we're looking at, of course. And you can see how important this level is. This is a monthly chart. All the way back in 2018 and 19, this proved to be an extraordinarily strong level to break through. And, highlighted by the fact that, we've got 3 months in a row here. That's a quarter of a year where it basically tried to go above it and pulled back all the way down and closed below this level here, which is a 98.80 level. So it tells you how strong this level is when a monthly candle is trying to break through and is unable to close above it. So it was a very, very strong level to begin with. So the fact that it got up there, there was, it was almost a given that it was actually going to reverse off this level and come back. And of course, the beneficiary of that is the euro. So we'll jump into that one in a second. But this is very, very important to keep an eye on. And this is why we always draw these lines and check them out on the bigger time frames. But again, it's starting to resurge a little bit there. But we're going to treat this level with a lot of caution, because we know it is extraordinarily strong and has been for a very, very long time. But that was a pretty easy reversal. And the euro was the beneficiary of that, of course. This little candle pattern here was always promising that it was going to jump up and bounce past this level. And that gave us some really good trading from this level here up to close to the 20-day moving average. If you go to the smaller time frames, it really tells the story. We had the lightning bolt here. So the trade was right here. Once this trade there closed above this level here, we had the lightning bolt confirmation and a close above the 20 moving average. That was your entry. Very, very clear, very, very crisp. On the 1 hour, of course, same deal really. Once we had that lightning bolt effect, once we broke past this level here and it made a new high, that was our signal to go, and it was pretty easy trading after that. We've seen a little bit of weakness now, but it did get very close to the daily 20 moving average, so no surprises there. And now it's really a bit of a wait and see. If it continues to make lower highs and lower lows, we can aim for these lows again. around that 108.50, but we are governed a little bit by what happens, of course, on the dollar index. In its own right, though, it is pretty much trying to make a lower high, lower low sequence that may continue. If it does that, and the 4 hours probably the key here. If we get a daily close, for 4 hour close, below the 20 moving average, then I'd be starting to look for the shorts again to these previous peaks. But if it doesn't do that and closes above this level here, then we would be looking at getting that bit further back up to the 112. So look, it's one of those ones where you've got to watch. Scalping definitely on the euro. I wouldn't be going for anything more than a scalp. The 30 to 50 pip range is the optimum for this particular one as well. Okay, so just keep a very, very close eye on that. All right, the last one we're going to have a look at is the S&P 500. This one is behaving itself in a very, very good manner. Look, it looks like it's all over the place, but in actual fact, it is actually printing a series of lower highs and lower lows and testing the boundaries of our patience for the long, that's for sure. But you can see it's touching the 20 moving average every time it does it. It's making lower highs and lower lows. It's respecting the levels that it's reached previously, and no surprises that when it did resurge yesterday, you can see here that the place it stopped was the role reversal zone. What was very strong support previously, right through there, and through there, is resistance once it gets up there. So no surprises there. Fairly weak today. You can see it's a pretty weak trading day so far, but we've still got a few hours left in the New York session, so there is a chance for a bit of a resurgence and potentially push up. Where it closes today is going to be important. If it continues to sell off and closes around this level here, that's a fairly weak sign. So you can go to the 4 hour and you can see here that it's starting to continue down. If we get more weakness, this is the target that we're going for, the 41.50 in the first instance. Again, all scalp mode on this one, but of course, if it starts to turn around from this level, this is a mini support level in itself. So if we get a 1 hour change of trend in this level here, and we see a lightning bolt on the 1 hour higher high, higher low sequence, close above the 20 moving averages, then we could potentially start targeting the 42.77 area again. So again, not a lot of pips. We're only looking at scalping at this point in time, but that's okay. So it doesn't matter. All the strategies still work. We just have to bring in our expectation, and also that brings in the stop losses because we do match them up to what we're seeing. But all in all, for a market that's been very, very volatile, this is behaving in a technical manner. So it's been pretty good this week. So hopefully you've been able to get some good opportunities this week. We've had a lot of scalping opportunities. I've seen a lot in a lot of the majors and in the indices. They've broken key levels and they're trading within key levels, which I think makes it a bit easier to trade. So hopefully you've been able to take advantage of that. Have a great weekend, and I look forward to seeing you all next week.